Great. So welcome. I'm very happy to be moderating this next session on navigating the future of regulated crypto. And I'm fortunate to be joined by two people who effectively sit at the center of this evolution. Duff Gordon, who is VP of International Policy at Coinbase. Nadia Manzari, who's founder and partner at Manzari Legal. So welcome to both of you. I suggest we get straight into it. And perhaps let's look at a European perspective. We have to talk about MyCar. I'd love to know from your point of view, Nadia, MyCar's moved now from theory to implementation. What sorts of opportunities, what sorts of challenges is this bringing up for firms at the moment?
Shall I start with the challenges first, maybe?
Like.
So yeah, we have now a full regulatory framework for crypto asset service providers and EMT issuers and stable coins. I would say the challenges, we already had this WASP registration in Europe for, I think, 4 or 5 years now. And the challenges now are that those actors have to go through a full licensing process. I would say that the WASP process was an easier one because you just had to comply with some money laundering aspects and then show that you are compliant with them, and then the regulator would register you, but only in one country, so no passport. And now the challenge is for those actors to level up to the license, to the real licensing progress. For my customers, what I have seen is really to go through this entire process while already being also active and working. So there is a stress level which is higher than for an entity which would start from scratch and asking a license and launch the business. Here they are in the business, and then they had to go through that process. So that was, I would say, the main challenge with an entire putting up the procedures, custody issues. I would say the main issues were about custody and where are the keys, how do we set up the IT, because they are mostly based on decentralized IT systems and mechanisms, which is completely the opposite what I would say the regulators and MiCA would require. So that was the main challenge. On the other hand, like with and I am a lawyer and ex-regulator, so I have to, I really mean it. I just not have to say it, I really mean it, and that's my experience over the last 25 years. With every new regulation, you have many opportunities, you will see many new businesses coming. PSD1 has brought new actors, new businesses. From PSD1 we have now FinTech and crypto and everything. So I think the new regulation is going to have the same effect. Once in place, once people are comfortable with it, we can build on and create new services and products based on that.
Certainly. And Tom, of course, Coinbase has been through the process, the licensing process, including in Luxembourg. What has that shown you about, the regime itself, perhaps, the boundaries, especially in the context of innovation?
Happy to answer that, Simon. It's good to be here. It feels like we've got a little piece of Luxembourg, in Singapore. So delighted to be here. The first thing I'll say is that we are supportive of the MiCA framework, and well done to the European legislators, because they moved very fast. And I think they started deliberations in Brussels in 2018, 2019. And if we look around this hall, there are tons of countries that haven't got to that MiCA level yet. So the first thing is we think it's a comprehensive framework, provided regulatory clarity, and the passport, which is the key thing. So you can have your single license and have access to the 450 million people across Europe. So we're very positive and supportive of the framework. But I will tell you that it is comprehensive. And so when you come to get licensed, there's a lot of things that you have to do. And Coinbase is a big global company, and we're delighted to have hundreds of lawyers and compliance staff. But this was probably the most complicated thing that we've had to do from a regulatory kind of licensing perspective. I think, Nadia, you touched on it. There were a couple of issues, and we had an excellent engagement throughout with the CSSF, with the regulator here, very engaged and talking to us through some of the ambivalent issues and some of the more difficult ones. Partly, how do you balance this need for localization with kind of a more global liquidity pool? And when we think about custody, like when we as Coinbase look after your assets, we're protecting a number. And if we protect that offline kind of number in just one place, when we move it into the hot wallet, the attack surface, it's very vulnerable. So we want to shard that number and those keys across multiple different places such that we have veto control and accountability locally, but we can benefit from distributed and decentralized security, and trying to make sure that we could bring what we think is the world's best-in-class custody technology to Europe and make it work within the European framework was something that was complicated, but we got there and we're very excited about that. And equally, our ability to provide best execution to Luxembourg clients and EEA clients by having access to multiple different trading venues in Europe, but also outside of Europe where there's deeper liquidity, was also really important. So that was key. The other area that is difficult, I think, is around stablecoins, but we may come on to that afterwards. But we are delighted to be licensed in Luxembourg. We got there in the middle of this year, and this was a huge moment for the company. And actually, our CEO came over to Luxembourg to kind of celebrate that fact. So it was tough, but we got there, and we're very excited to build on the foundation that we have.
Certainly, and obviously it's great to have you. Can we just stay with that point, actually, because you started to touch on the kind of global aspect of this. Obviously, the regulatory regimes are not quite moving at the same pace. You know, look at Europe, look at US, Asia. You're a global firm. How does that play out for you? What sort of questions does that raise around, for example, convergence, mutual recognition, etc.?
It's difficult. I think that is the topic that a lot of the regulators are thinking about now, particularly in light of the Genius Act in the US. The Genius Act in the US has made it clear to everybody, I think, whether you like this technology or not, you feel threatened by it or not, is that stablecoins and crypto and the integration of digital assets into mainstream finance is happening. It is happening, and it's going to happen quite fast. MiCA, when it came out, did not have any mutual recognition or equivalence arrangements within it. That was a pity, because even if there wasn't another regime like MiCA when it came out, my perspective is you want European legislation always to have a gateway for equivalence, because that's an incentive for other jurisdictions to align and come closer to the European rules. I'm hopeful that we will be able to get recognition, whether that's substituted compliance or equivalence or whatever it is, on stablecoins, which is key. There's a big issue in Europe around single issuance, multi-issuance. I think that's really important. And then we have harmonization. We're never going to get identical rules. It's just not going to happen. It's just not going to happen. But we want rules that are similar enough that we can facilitate a global market here. So I'm hopeful that that is the conversation that we'll take forward over the next 12 to 24 months.
What's
your perspective on this, Nadia, from the legal side? Looking at, for example, interoperability, for example.
Yeah, I think Tom is fully right. But saying it should happen in 1 year time is maybe very optimistic. But I think it's when you look how passporting and everything works well in Europe, and I think that's what we do have. It's the trend we also would need in this space, having more alignment on each other's framework in order to make it easier for the firms, because otherwise it means a lot of resources, a lot of costs for them to be compliant. It needs huge compliance departments being able to switch from one compliance requirements to another. Maybe not happening in a year time, but I would hope that
Well, I just want to say as well, I think we would fragment liquidity. So, for example, if we can't get fungibility in stablecoins between the US and the EU, then effectively the entire European crypto market is going to grind to a halt, because the trading pair in Europe right now is USDC, right? Or it's a MiCA compliant regulated stablecoin. And if we disallow this multi-issuance model, which Brussels is talking about right now, we're going to grind to a halt. So we have to get this to work. We have to get it to work. And I'm hopeful that the discussions in Brussels next week will create a path forward on that topic.
So let's perhaps stick with the direction we were going in there. Stable coins, tokenized deposits becoming this bridge now between TradFi and the on-chain world. Where do you see us going? And it's a question to both of you, in fact. Where are we going in terms of regulatory acceptance? The questions around, for example, competition between regulated and unregulated tokens. You might have a view on dollarization, because you sort of headed in that direction just now. What's the future here?
Taking the question on tokenized deposits or stable coins, I think they have the same objective, so instant settlement and fluent settlement in the railways. When you talk about regulated, for me they are almost regulated because we talk about regulated token deposits, so it's also regulated institutions like only banks who can issue them, so they may have the same objective but maybe another affecting another space. Now for the stablecoin regulated versus unregulated, as a ex-regulator and as a European, with my car, I would say in favor of course of regulated stablecoins, because we have seen over all the years, as long as it remains unregulated, specifically within Europe, it's hard to work with institutions, it's hard to cooperate with a regulated world. So that's complicated, and I would say for me it makes just sense to have this financial activity regulated like any financial activity. So yeah, that's I think my position to token. Yeah, but tokenized deposits would say for me at the moment that has another aim, specifically in the banking sector.
Stablecoins is such a big theme, and we could spend like an hour talking about them. So I'm going to try and think of different things to say. One of them, I think, is to say that the US is not doing a CBDC, which is really important, which means that they're going to put a lot of weight on the shoulders of stablecoins, both in the payment space, but also in the wholesale settlement space. And that is a potential difference with what we see in other potential jurisdictions and markets. The other big question that I see in the regulatory debate right now is, what is the impact on the adoption and scaling of stablecoins on retail bank deposits? And is there a knock-on impact on credit provision and credit intermediation in the real economy? And if we worry that there is going to be a big impact, does that legitimize banning interest, putting caps in place on the holding of stablecoins, which is a big topic in light of the British proposals that came out of the central bank recently? And look, our view on that is, if you look at the observable history of the last 8 years in the US, we have 8 years of data from 2017 from USDC. Bank deposits and the market cap of stablecoins have gone and moved up. Both of them have moved up in parallel, which suggests to us that these are complementary instruments, not necessarily fully competitive instruments. So we certainly think that there is a way that we can manage the transition. And our contention would be, this is about managing the transition, right? Stable coins have product market fit, right? They are peer-to-peer, they're programmable, they're cheaper, they solve cross-border issues, they solve lots of domestic issues. Absolutely, people are going to use them. We're going to have take-up. We just have to manage the transition between where we are today and where we're going to get to. That doesn't mean try and pause things or stop things, because I think the genie is out of the bottle, and I think we're going to see a lot of adoption next year.
I think, in fact, I know that anything you wanted to add on that?
Okay, für mich.
Was?
Ich war fertig.
I was just going to touch on the fact that I know that at Coinbase you have a fairly bold vision in terms of where you see, for example, tokenization. We've seen it moved into the security space. We've seen the first tokenized funds come in Luxembourg. Where do you see that going? The distinction between traditional capital markets and fully on-chain, is that something that you see dissolving? And the question to both of you, in fact, dissolving over time? And if so, on what time scale?
I would just say it in 2 words. I think what we have seen over the 2 words or 2 phrases, what we have seen over the 10 years is there's a progressive convergence of the financial markets and the new entrants, I would say, with MiCA and everything. I think it's convergence to one and a unique market at the end.
Well, first I'd say Luxembourg has done a lot in this space with the DLT laws. I think 5 laws or 4 laws. Four laws. And that's absolutely right, because I think we are going to see a migration of real world assets moving on chain and have the cash settlement leg in the MiCA compliant stablecoin as that before we get the CBDC from the ECB. At Coinbase, we have a very ambitious view of what this could look like. Because we want to bring down the barriers to entry for capital market participation globally, in Europe, but globally. We want we're discussing a concept around the unbrokered. We talk about the unbanked and the underbanked. What about people who are unbrokered? People who can't get a slither of Nvidia, a slither of Tesla, some of the highest growth, most interesting companies. Why can they not do that? Because their banks in Europe don't have access to the US broker, doesn't have access to this, doesn't have access to that. What we think we can do, and we're working very diligently with the SEC on this, is to get an innovation exemption in the short term to disapply a swathe of existing capital market rules to allow us to bring forward a very innovative model that will effectively include the immobilization of existing shares, minting a twin, which is a token that is not a derivative or a fixed income instrument, but is the share itself, and carries with it the bundle of rights, the shareholder rights and all of those things within that token. That token can then reside in your self-hosted wallet, so you are the custodian, right? The CSD, it disapplies because we have the blockchain that can do that, and we have the smart contracts for the corporate actions. We have verified pools, which is Coinbase's KYC pool, everyone's KYC. So you can take your token and you can trade in the verified pool on a decentralized exchange, and you can trade 24/7, 365, swap one share or a slither of a share for another, effectively bring the functionality of crypto trading to capital markets, and let's meet the young people where they are. And as long as we can get the reporting right, the market integrity piece right, the tax piece right, the disclosures piece right, if we can do that, we now have the building blocks technologically to create and re-architecture post-trade capital markets. And then we can do the primary piece too, but I'll stop there.
So we're probably coming to the end of our discussion. So let's do a speed round. One final question then from me. If there is one thing then that you could, a lever you would move, whether it's regulatory or something else that gets us where you believe we need to be in the next few years, what would that be, Nadia? Yeah, so if there's one item, so one lever that you would move, regulatory or otherwise, in order to take us where you believe we need to be in the next, say, 5 years, what is that?
One item which I would move. As I said, I'm a lawyer and a regulator, so I would say there's nothing which I would move. Maybe simplifying a lot of things. When I look at MiCA, it is a complex regulation. It's far too complex with all the RTSs around. I would simplify it. I would say that's the easiest way to move forward in Europe again in the financial sector.
If I'm going to take a European perspective, I don't think I would reopen MiCA and try and reorganize parts of MiCA. I think I would focus on the next thing, which is creating a level 1 framework in Europe for tokenization that really works. Yeah. Or it could be, and in the meantime, how do we give Luxembourg and other member states the flexibility to keep innovating in this space? Do we need a 28th regime? I don't even know what that is. Someone mentioned that to me. Or do we need just like ESMA to coordinate the different member states? I do know what it is, but probably not. Okay, but we need the flexibility to, but the point is we need to be able to move forward as Europe in this space before we get the level 1 new way of disapplying CSD rules and this, that, and the other. So that would be the lever to pull. Rather than reopen MiCA to relitigate parts of MiCA that I think are settled, I think we should be focusing on the future and this level 1 framework for tokenization.
So I think suffice to say some pretty ambitious views from both of you in the space. Thank you very much for your insights on this and for taking us that step further in the discussion. It's been great to chat.
Thank you.
Thank you.